Afternoon, ladies and gents. Simon Brown here doing today's podcast. This is the August version of it. As always, legal disclaimers. This is part of the series. We've got the links there, which is the 3 trading systems, which we did last year, 2017. We're doing a series of face-to-face events, Durban, Joburg, and Cape Town. I thought I was doing a series in Durban and Cape Town this month. Turns out it's first week of October that I'll be down there. But we're going to record some of those to put them on as well. And they feed the live event and these feed into each other. This is August, so we've got 3 or 4 left for the year after today. And the previous ones so far that we've done in 2018, you can download on the webinar download. They're available. You can go grab them and see what's happening with them. And they stand alone, but they kind of fit together, if that makes sense. For Mark Manson, this was actually from last month's one, but I've left it in and found focusing on habits, on process, rather than focusing on goals. Focus on those little habits that ultimately make up those goals and get us to where we're going. So today we're looking at trading the news. I'm going to come to a trading system for the news in a bit, but in the immediate, I want to talk around news and if it works and if it adds value. And as an example, New York Stock Exchange 100 years ago had about the third the number of shares that are listed now in 2018. 30 odd years ago in the 80s, we've got about twice as many shares as we had back in the 80s. Yet back in the 80s, there was an hour of market news a day, and obviously in TV, and there was nothing in the 20s. We didn't yet have TV. Yet today, we literally have hundreds of hours of TV every day. We've got blogs, social media, websites, print, radio. Just up here in Gauteng and Durban, we've got a large selection of possible TV and radio, etc. And it is, the question is, has the market got more complicated? No, not really. Bigger? No. I mean, a bit. Twice as big, but not much so. But certainly there's a lot more news. And I use that news as in inverted commas around the market. A lot more information coming at us every single day. A lot more for us as individuals to try and digest and try and get into our trading space. And I'm talking particularly here trading. If you're an investor, you take a different perspective on news. But certainly as a trader, the question is this actually adding value to us? There are literally billions of data points every day. If you think about the 100,000 plus listed shares around the planet, tens of thousands of indices, commodities, derivatives, currency moves. If you think about their price changes every second, if you think about news flow from the companies, not from commentators such as myself, etc., they're literally billions of data points a day. No other industry creates more data than the financial services industry. Our cognitive bias would tell us that we can get this information, compute it, stick it into our head, and make informed decisions on it. And there's 2 major flaws. One, we can't get all that information, nor can we get it into our head. It's more data than is possible out there. And if you've had a look at a Bloomberg terminal, there is just quantums more data than we could ever conceptualize. We can't get it into our head, and even if we could, even if we pulled it into an Excel spreadsheet and we had the fastest computer in the world, we simply wouldn't be able to compute it. In other words, all this extra news is frankly just becoming extra noise, especially for the trader. And we get more experts. These radio, TV, print, blogs, social media, etc., are needing more experts. I mean, can they see the future any better than we can? No, they might be smarter than us. This might be their full-time profession as opposed to us. It might be a part-time profession for us. But their ability to see the future, they can perhaps make better informed decisions. I'm going to come to that in a moment. If it bleeds, it leads. So, of course, we like the horror stories. We like the crashes way more than we like the stocks that have rallied high. But what's important is track records. There's a major point lacking in this industry is that you can go on TV or radio, whatever you want, and you can say something, and there's no follow-up. I could have gone on the 1st of December and said Steinhoff is the best share in the world, put all of your money into it, and there's no follow-up from anyone to come and say, well, oops, turns out Steinhoff wasn't so good, now what? So how do people rise above the noise? Well, they make bold, ridiculous predictions. You're always getting someone on one of the TV shows, the man, and it's nearly always a man, who called the 2008 crash. Yeah, but he might have been calling it for 20 years. I mean, I literally had a friend, and I use the term friend loosely, who called that crash from about 2001. So he called it for about 7 years. He was right about it, and he was also right about why it happened. The point is, when markets crashed, they only crashed back to the level at which he had decided to, he had started making the call. He never lets us forget that he called the crash, and he made no money in the 6 or 7 years that he waited for the crash. So what we get is ultimately it becomes a hype machine. You want to be more ridiculous, more bold. You want to stand out from the others, so you make crazier and crazier. And there is one or two things. Either you get away with making Sorry, audio dropped. It seems to be back. You get away with making absolutely crazy predictions, which there's either no follow-up to, or you just keep on making the same prediction, and like a broken clock, eventually, one day, you'll be right. So what we're looking for is the hedgehog and the fox. Isaiah Berlin, in 1953, wrote about this. It takes a view. A hedgehog is someone who looks at the world via a single defining idea. There's a chap on Twitter who says everything's a bubble. Other people who say it's all about gold. Whatever that might be, you have a single defining idea which kind of like becomes who you are, becomes your rationale for what you do. You become completely blinkered, and you fit everything into this view. And anything that disregards the view either gets warped into fitting it or just discarded as, well, that's irrelevant and not all information is important. As opposed to the fox, who draws on that wide range of experience and is actively seeking out more information and divergent views to challenge and threaten their view, so that they've got at least a moderately successful view. We talk about the Bayesian probability theory, and I'm going to come to that. I think it's next month's session. We will talk about Bayesian and how we do it. But bringing in multiple views. The problem is that this is not happening in our industry. It's not happening from most of the experts on TV. There are exceptions, but it's not generally what we are seeing out there. We're not finding enough foxes, and they're often just not given the credit. Why? Because when you ask a fox a question, oftentimes they don't have a definitive answer. They're a, well, on the other hand sort of answer. Whereas your hedgehog is absolutely definitive and makes for much better media in the sense. So is more news better news or just noise? Mostly it's just noise. The cacophony of noise that has grown up around the markets in general has not aided to our ability to understand them or to make better decisions from them. So a couple of thoughts. First is turn off the noise. Watch other channels, listen to other radio shows. When I listen to Bruce Whitfield, I find him highly entertaining. If I miss him, I sure don't go back to the podcast. And if something's happening and I can't, that's fine. That's not how I inform my view. Occasionally, there will be an interview of interest, or someone will say something, and I'll go and do some further digging and use it more than anything as a starting point. But it's about trying to find that quality news, because it's not all equal. Firstly, someone on TV or wireless should be talking their book. They absolutely should. Because if they're telling you shares are lovely and they don't own those shares, they don't have skin in the game, well, then I'm not sure what they're saying. But, when is their book changing? What is their risk profile? What's their time horizon? What's their track record? Are they any good? It's easy to get onto media these days and have your 5 cents, but is it worthy of being communicated? That's my concern. So who are you listening to? Who are your favorites? And that's the point, is to become discerning. And I'm hosting Stockwatch again on a weekly basis, and from next month I'll be doing it nightly. Juliet is off for 6 months. And there's some of the guests who, when I first started interviewing them, and in fact it goes back to when I launched Stockwatch, Hot Stocks on CNBC and then Stockwatch on Business Day. Some of the guests who initially my thought was I didn't rate them much, but slowly over time and listening to what they say and their convictions, it becomes, you start to really understand what their thinking is, and you might not always agree with it. I'm not talking about agreeing. I'm talking about understanding where they come from. And one example I want to throw out there, Greg Katzenellenbergen from Sunderland Private Clients, he talks around, he recommended Richmond as a stock pick the day before results. Results came, results were fine, nothing happened to Richmond. 6 weeks later, he went back to Richmond because he's saying what's important here is I need to have consistency. I liked it, and I don't suddenly on one set of results, one news point 6 weeks later change my mind. The flip side, if he had changed his mind, he would have told us, and that's important. And be careful of people who just, you own a share, they like it, so you think they're great. I mean, we understand that trap, and that's immensely easy to fall into, and we've got to make sure we're not falling into that trap. So the truth of the matter is that everything I've been talking about so far is opinion. Commentators on TV, blogs, social media, wireless, print, etc. is all opinion. Warren Buffett takes it a step further and says there's two things that you can believe in a set of results: the page number and the dividend amount. The page number because we hope they can count, and the dividend amount because they're going to pay it, so they better have got it right. Otherwise, either they or us is in for a surprise. And it's not that there's lying going on per se. It's just that accounting standards, different accounting standards. The banks are all moving off IAS 39, which is an old accounting standard, and they're moving on to IFRS 9. But they're doing it at different stages. If you looked at ABSA's results last week before, there were three sets of results. One, as they were, a second with the cost of the Barclays divorce removed, and a third trying to smooth the change from ISA 39 to IFRS 9. What's his name? Jack Welch, who was a CEO of General Electric, talks about the time when they discovered that there'd been some fraud in one of their divisions, and it was going to cost them, I forget, say a couple of $100 million, and it was going to make their results look ugly. So night before results are out, Jack phones around all his senior execs and says, can't you go to your departments and each find me an extra 1 cent of profits? Which they do. And Jack Walsh puts this out as how great his team is and how resourceful they are. I look at this and think, well, man, if they all just find an extra cent the night before, then like what's happening? Yeah, where's our truth here? So it's all just opinions. It leaves us with one actual real truth, and that ultimately is, and it crashed on me. If you've been to my presentations, you know what I'm about to say, so the suspense is not killing. There we go. Leaves us with one truth, which is price. Everything else is opinion. Price is your only truth in the market. Why? Because people change shares, money. Money changes hand. Now, I can tell you that I think Steinhoff is worth 0. Question, where am I short? I think Naspers is worth 5,000. Am I long? Have I got money in the game, or is it an opinion? There's a fundamental difference between having an opinion and actually doing something. So price is the pointy end of all of this. And for traders, what we do is we come to technical analysis and we add indicators and oscillators and the like. And all they're doing is they take price, they run it through a formula, and they give you spit out a number, MACD or something. Ultimately, that is a derivative of the price. You've actually moved further away from price instead of closer to. You can't get closer to price than price, but you've moved away from the only truth. Hence, in my trading, either I'm focusing exclusively on price or some very simple moving averages, because price is what matters. Everything else is noise. Trade the price, ignore the noise. And I know the noise is a cacophony, and last week, Monday, was the end of the world. And Tuesday, when we crashed down, I took a long position on the Aussie, and I'll show you the chart here. So this is the top 40. This is our trading range since February. So we're into now 6 months and some change of trading range. Was that Tuesday afternoon? My bad. Is it Wednesday afternoon? I'm forgetting which afternoon. 15th was Wednesday afternoon. That was the day we crashed down. That was Monday, crashed, then Tuesday, and then we got the massive sell-off on Wednesday, came to the bottom of that range. Now, everyone was terrified and we're going to crash, we're going to break lower, except that this range is held once, twice, 3 times, 4 times, and we might want to call that 5 times. That level at around 49,000 on the top 40 has held 5 times in 6 months. That's real. So I took a short in the sort of long after 5 o'clock on Wednesday. Why? Because forget the noise, which was doom and gloom. We just lost, what was it? I forget the exact numbers, but I think it was 3.6%, almost 2,000 points on the day. But this was telling me, price was saying, time to buy. Now we've had 3 green days subsequent to that. Now I'm thinking, my 721 is looking like it's going to fire a short, so I'm going to close this position, take some money and run. Forget the noise, trade the price. There's, of course, times to panic. And that's major news that changes the picture. Totally unexpected, new, out the blue, and has to matter. And when I say, I'm saying ignore what the company says. The company will always tell you they're in control. MTN and the Nigerian issue. I sold the afternoon that news broke, and the reason I sold in the afternoon was because I couldn't believe it. I had a friend from Nigeria who'd messaged me on the Sunday evening telling me about this website reporting on the news and that it was a credible website. And I'm like, this can't be true. A $5 billion fine, US dollar. Monday morning breaks, MTN says nothing. Finally, 2:30, they issue a sense. I'm like, I don't know what I was more offended by. The $5 billion fine, that they're so useless, they got a $5 billion fine, or the fact that they waited until 2:30 in the afternoon to tell us, something which they had known for a couple of weeks. I sold $172, never looked back. Steinhoff, let's forget you could have done it, and I forget the date. It was Tuesday when they said they would publish results, but they wouldn't be audited. The stock was down, 10%, closing just above 40. There was bad news, time to exit. If you missed that, the next morning you woke up and discovered the CEO was fired and there were no results. There was your entry exit point. And that point, you're at 20. So sometimes it pays to panic, but this is not news. It is news. I mean, it's that blurry part, but this is where something is fundamentally changed. This is not opinion. Nigeria is fined $5 billion, not opinion, fact. Price is responding. What is it doing? Collapsing. Best thing you can do, get out. Steinhoff, fact. CEO fired / resigned, doesn't matter which. Results can't be released because they can't be signed off. These are facts. Time to panic. But here is a system for trading the news. It works particularly well for non-farm payrolls out of the US, and you trade dollar-euro. You can do it on almost anything, but that's where you're going to see significant liquidity and you get a really nice move. But even during the course of the day, if you're day trading equities or something like that, results break, you can do the same sort of process. In essence, a 1, 2, 3 trading system. You ignore the actual news. I mean, you know when it's coming out. You know that non-farmers at this time. You know that the results are out. That's why the share's moving. Forget trying to understand the results or interpret, are these good non-farm payrolls? Is that a good unemployment level? Just respond to what the price is doing. So you're watching the index, the currency, the stock in as short a time as possible, ticks, minutes, whatever you've got. You wait for that first move on the news, you ignore it. Second move reverses against it. You flag that first move as your entry. Third move is your entry. So graphically, there's your first move higher. So news breaks at this point, runs higher. Does that period take 12 seconds or 12 minutes? Doesn't matter. Thing is, it's all in one direction. It's bang, 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 bang. Buyers, 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 going up, 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 up. And then starts the reversal. As it hits the reversal, that high we made on the first move, that's your entry point. So we then pull back, that's move 2, and then we break through. That point here will be your entry point. Now we have crossed. Now we're into that trade. Typically, I then put my stop at around halfway, at around this point, sort of here, bottom half of that retracement, and then I'm looking to exit as soon as I see any weakness coming in. Or you can put a trading stop. If that's 20 pips, put your trading at 25 pips or something. Give yourself some wiggle room. First move, ignore it. Second move, ignore it. But flag that where the first move ended, and that then is your entry. This is why it works really well on that short time frame, because you can see it visually very well. Tick charts are probably best. I'm using Iris. We don't have tick there, but you can certainly use a minute chart and it works well enough. And sometimes this will happen. Runs up and then collapses down. You walk away. Or it just runs and runs and runs and goes off the top of my screen into the middle of Never Never Land. Again, you walk away. But most times, you're going to get that 1 move, 2 move, 3 move. And that 1 move is obviously people responding, liking, in this case, the data that's just come out, wanting to buy, thinking there's profit to be made. They start to fade a bit. The sellers come, folks who are looking to perhaps take some profit, were ahead of the curve already, etc. They pull down, they don't breach that earlier level, and then they move off again. And that's then, it just gets that second wind of momentum. And trying to enter on the first one is often a false breakout. We see a lot of false breakouts these days, and just really a mug's game. Wait for it to pull back and then wait for that third leg and enter when it moves higher. Doesn't close, moves higher than where that first leg went to. But just stop at about halfway down that gap. I'll take it about 60-65% of whatever that distance from green to the move lower was. I'll put my stop. I'll trail it, But if I'm seeing weakness, I'll take the money. It's not something that comes often. You need big results. Naspas last week would have worked fine. Naspas does things slightly different. Runs, pauses, runs again. But that pauses a little bit down. And Naspas was in the back of the 10-cent results. Certainly, as I said, non-farm payrolls about the best. We saw it with the MTN story. We saw it with the Steinhorst story. Crash down, bounce up, and then head lower again. So in closing, we come to the market and we take this belief that we can interpret everything, that we can be smarter than everyone else. Understand that most of the people out there are probably no smarter than us at all. Yes, they might have fancy degrees, they might have jobs at asset managers, etc. But we can certainly be as smart as them. Find out those people who are the foxes. Find out the people who do think well and who are prepared to change their mind and who are happy to. Graham Kerner for years hated on Naspas, and recently at 3,000 Rand was like, nope, at $3,000, I'm buying Naspas. Whereas some people are like, you hate a Naspas, you always have to hate a Naspas. The flip is someone who likes it one day, hates it the next, and then likes it again the day after. Lack of consistency. As a trader, have a plan, trade the plan, watch price, trade price plan. Price meets plan, that's the pointy head. Ignore that noise. Why is it moving? Why is something going up? Today, our markets are green across the board. Why? More buyers than sellers. That's the easy answer. The hard answer is, why are there more buyers than sellers? And truth of the matter is, we don't know. We just don't know. We can make opinions, but they're now just opinions. So find the price, figure what's going, and we can use some light touch technical analysis in the space to give us a probability of price. That works perfectly. But in essence, that's what we're looking for. We're looking for price. If it's moving up, you want to be long of it. If it's moving down, you want to be short of it. And if you're not sure, you want to stay away from it. I'll take some questions. One question coming through already saying, shouldn't I stay away from this chart as a trend-based trader? Short answer, yes, because what we have here is no trend. We have an absolutely sideways moving market. The point being, and the reason why I keep on going in is because you don't know when the break's going to happen. Every time it doesn't break again, it's like, and the trick is I've been having some, go shorts at the bottom, go longs at the top. This time it looks like we're going to get a short sort of closer to the top end of the range. Will it this time break out of the range, either up or down? Don't know. But as a mechanical trader, if I could go back 6 months and not trade these last 6 months, although that was 2 good trades. That was a good trade there, and that was a good short there. But yeah, if I could undo it, but you can't, and you want to trade every signal, so it's important. Question, did I trade the kangaroo tail? Yes, I did. That down there, so I was short going into that. There's my crossover. I was short coming into it. That there is a kangaroo tail, which is a massively powerful reversal signal. And I did take a long. I was stopped on that day somewhere down this kangaroo tail. And at the close, I then took a long. I usually, if I'm doing trades like that, I'll do them after the closing auction because Safex is open till 5:30, so I can see that my it has formed. And I then took that long, which then turned into a long trade up at this point as well, which then carried on. So that was a fairly nice trade. EJ, you're asking, could I use this for long-term trading? EJ, so I'm going to answer it from 2 ways. I mean, yes, you can. The couple of tricks to it with long-term trading is expand your time frame. So you'll note here, I'm looking at a daily chart. I used to trade Aussie in an hourly chart, and it was just, even though my job is to look at the markets, I was missing entries, not exits because they're in the system, and I'll get stopped out, no worries. But I was missing some entries, and it was hard to do. So I switched to daily. So to my mind, and I draw the distinction between trading and investing, but to my mind, the time frame isn't going to be an issue. That's just looking at different types of charts. When you're investing, you want to bring some of that noise in, but you want to be very careful as to which noise and how you're bringing it in, and sort of how much gravitas, for want of a bad word, that you want to give it. And generally what I'm doing is, there are a couple of folks who I particularly listen to in certain sectors. I consider them to be the experts in their spaces, and I'm going to focus on what they say, but I'm not going to act on it. I'm going to use it as a tick in the column, which I'm adding more and more ticks to. Question coming through around insider trading. Insider trading is when you know information that the market does not know. For example, if I knew about the disaster awaiting Steinhoff ahead of before the announcement was made, and I traded on that information and made a profit, that's illegal. If I give that information to you and you trade on that information and make a profit, that's illegal. Truthfully, you can make a loss. It's still illegal. The point is, companies have to disclose information into the market timelessly. That is a requirement of the Listing Act, of the listing rules of the JSE. And if they're not, then there's issues. And if other people then get that information and use it to transact, they are breaching laws. Hard to prove. Comment, so I deleted it before I saw it. I think it was Jan who said, hard to prove insider trading. Very hard to prove. Now, what do? You phone your friend's wife's neighbor's third cousin 4 times removed. Hard to prove. And you phone them via Telegram so that there's no paper trail, etc., etc. Very hard. Ladies and gents, we will park it there. As I said, I'll be in Durban and Cape Town. Carlo, my pleasure. Early October. We'll be back again in September with the next in this series. Go find the previous videos. You can download them. Someone's saying, where do you find the videos? I will show you. If you log into online share trading, when you get in, under special announcements, webinar downloads. This is August, so this was number 8 for the year. There will be 7 already, and this one will be going online shortly. Ladies and gents, appreciate your time, everyone. Have a great day further. Cheers all.